very good afternoon to our RANsquawk listeners, and we've come through now the European cash equity close, so pretty much wrapping up the European week. We're going to look to answer a few of your questions that have come to the desk. One of the key questions then is this volatility that we're seeing at the moment going to continue, and also what are the scenarios based around a potential for a double dip in the global economy. Some of the market moves that we've seen so far this week do definitely point toward the potential for that being a real risk scenario in terms of several of the large institutions, both US and in Europe. We've seen them slashing back on their growth estimates pretty much globally from Asia and China, then Europe and the US for both this year and next. We continue to see very much a flight to quality, so risk assets or safe haven assets such as spot gold continue to print record highs, and we can pretty much anticipate that this will probably likely be the case going forward for a lot of these precious metal prices, which could well underpin as well some of the strength in the commodity linked currencies. Elsewhere as well, we'll keep an eye on WTI crude futures. In terms of earlier in the week, we did see various cuts as well in expectations out of the growth potential out of China, and any double dip scenario would likely impede the energy demand coming out of those more aggressive Asian demand producers or consumers such as that of China and India. Looking elsewhere then, in terms of bank stocks, they still seem to be the sector to keep a very close eye on. We've already seen Italian and French banks trading very volatile once again this week, with various trading halts seen on numerous occasions, particularly around the Italian banks. But we'll continue likely to see next week if any widening of those peripheral spreads continues. It will probably be the case that the ECB will once again be in purchasing, particularly Italian and Spanish bonds, as they look to continue to suppress those domestic yields. One of the things which we saw late in Friday afternoon's trade here in London was that of dollar yen, which did take out extremely large barriers which were seen at the previous all-time lows, roughly around the 76, 24, 25 level. Also tripped stops to take the price action through 76 to the downside. So all-time lows now being seen in Friday's session for dollar yen continues to prompt speculation on how far the Bank of Japan will be willing to let the yen strengthen before they would intervene. In terms of looking historically, quite interesting analysis suggests that in terms of their interventions on the last three prior occasions, they've continued to let the price fall further and further lower. So it seems to be their reaction to this could well be in the next few sessions rather than any immediate action being seen straight away, but definitely something to keep an eye on next week. That pretty much concludes then the questions for the time being. I hope you've all had a great trading week, and I hope you found it useful listening to RANsquawk and also have found some use for these videos. We continue to appreciate all the support that you guys give us. So with that, have yourself a great weekend, and we'll see you all bright and early on Monday morning.